Welcome everybody to Dragon Digital Events. It's our first digital event of 2021. By now we were all really hoping we could give each other big hugs and handshakes and see each other in person. We had planned for this event to be sort of semi-virtual and semi-actually in person, but obviously with UK restrictions at the moment, just not possible. For those guys that don't know me, and there is a lot of guys here that don't know me, which is really nice to see some really nice new faces. My name's Roland Stanley. I run Dragon Coworking, which is in Rochester, Kent, based in the United Kingdom. For those of you that are not too familiar with the UK, we're about 35 miles outside the southeast of London, and in a really nice place called Rochester. We've got a lovely castle, lovely cathedral, really strong links to Charles Dickens. So yeah, a really, really nice place to have a co-working space. So if you're not already, if you look us up on Facebook, Instagram, you'll see loads of pictures of Dragon Co-working and where we actually are. So welcome to all these new people. So a lot of people I don't know here. It's really, really nice to see some new faces. We've linked up with everything co-working. We've actually shared this event across the world to other co-working spaces as well, which help people like myself, co-working space owners, to actually spread the load of doing all these different events. So welcome to you guys, and thank you to all you guys that actually shared the event. I really appreciate it in your co-working spaces. Really, really appreciate it to do that. So just the format today, we've got two great speakers. We've got two members of Dragon Co-working here. Both of them really, really know what they're talking about, experts in their field. So we've got Sally Brady and Natalie Pieri, who are with us today, who are going to be speaking. So hi, guys.
Hi, everyone.
Brilliant. We will be doing a follow-up as well. So if any of you guys are on Clubhouse, we're doing a follow-up tomorrow at 6 o'clock. I haven't told you that yet, Natalie. I don't know if you're on Clubhouse or not. But we're going to be doing 6 o'clock at GMT tomorrow. We're going to be doing a thing about, so your business has no money, it's going to be called. We're going to be talking about things we're talking about tonight, about how you can actually look after those numbers and generate money within your business. So that is on Clubhouse. So guys, we're going to be talking tonight about knowing your numbers, which is something I'm really excited about. There's loads and loads of small businesses at Dragon Co-working. I class myself as a small business. I've been in small business for years. And I must admit, hands up, I'm one of these people that at the start didn't know my numbers, didn't really know what to do. I literally looked at my bank balance and thought, I'm doing brilliantly well, I'm doing rubbish. You know, I can live like, I've got to live on pot noodles this week, or next week I'm literally living like a rock star. And that's how I sort of ran my business, which was great. I would say making quite a bit of money, but it's a very time. I felt very, very worried about things a lot of the time, and actually knowing those numbers now and actually running a business properly, or knowing those numbers properly, it's such a relief, and it really, really, really helps take your business to the next level. So there might be a bit of terminology problems here. Obviously we're based in the UK, so certain things there might be a few little alterations, so most of it's going to be the same, but if you drop something in the chat if you don't understand it, and I'll try and answer that question, or you're welcome to reach out to us afterwards, email us, and we'll try and answer any questions for you. So it's enough of me waffling. We're going to start talking about those numbers. So if I'd like to introduce you to Sally Brady, I'm sure she's going to introduce herself, so I won't say too much. But Sally Brady is one of our members at Dragon Co-working. She's just taken on, upgraded to an office for 2021. So I'm going to hand you over to Sally to talk about, what you're going to talk about, Sally.
Yeah, I'm going to talk about cash flow and the importance of cash flow in your business tonight. So I am going to share my screen, hopefully, and hopefully you should all be able to see that. I can't see questions coming through at the moment, so obviously at the end we're going to have the questions anyway. Right, so the topic, obviously, I'm going to introduce you to cash forecasting and how you can make your numbers work for you. The first thing I'll do, though, is introduce myself, as Roland says. So I am a business planning specialist and executive coach. So my background is as an accountant and senior manager, and my last role was with the company based in the UK, French company Bell, that you've probably all heard of, Baby Bell, LIABILITIES, Boursin. It was that company. So obviously those sort of companies, corporate companies, squeeze every bit of profit they can out of the life out of you, basically. So I understand the pressures that brings, and obviously bringing that to my own company, I understand how that affects you as well. The other thing for me was a key driver for me when I set up on my own is I know as a big company, you have a huge team around you. As a leader, you don't have to be all things because you've got a team. But as a small business owner, there's lots of hats you've got to wear. So, the key driver for me was making sure that small businesses do understand the numbers and can get that external support. So that's where I come in. I do the planning. I am an accountant, as I say, but I don't do the accounting side of things. I focus around planning and forecasting. Hence the reason I'm going to talk to you tonight about cash flow. Now, as a business owner, you'll know that cash flow in your business is king or queen, whatever you want to call it, but it's the thing that you should be measuring. But quite often I see that businesses aren't. And like Roland's just said, you get a bit of money in your bank and you go, well, hey, I'm going to have a party. I'm going to buy a new MacBook. I'm going to, have a splash out and get a new car. And then suddenly you look at your bank balance next month because your client hasn't paid you and they can't pay you and you're absolutely stuffed. So that's why I always say that your cash definitely is king, and it's important that you know your numbers. So the other thing that I want to dispel tonight is that you need to be an accountant to know the numbers within your business or do planning, because you don't. This is something that you as a business owner can do and just keep it simple. It's all about keeping it simple. As accountants, yes, we can complicate it for you, but actually we can do that at the end of the year. During the year, you can get this information for yourself quite easily and keep it simple. So that's what I'm going to talk you through now. So this is the basics of planning a cash flow. Now, I belong to a CFO group, and mostly that's a financial officers or financial directors group. And one of the arguments we all have is about the tools you use to do your forecasting. Now, a lot of businesses will say that, they use their accounting systems or they'll have a specific model. Natalie and I are both big fans of Zero Accounting, and that has a cash flow forecasting in it that can do it for you. But it's probably not, it's quite rigid in some respects, so it's probably not as manipulative as a small business owner that you need. That when your clients aren't paying, it's about moving those numbers back, or when you want to push something back on a supplier perspective, you might have supplier terms within your accounting system. So you can't quite move it as easy as you can if you're using like Excel or Google Docs. They're my tools of preference because I find they're easy to manipulate your numbers and easy to build your model in. And again, I always say simplicity over complexity, keep it simple. So by using a tool like that, you're keeping it simple. You've got a simple spreadsheet in front of you. You can put the numbers in and you can push them around as to what you need. Now, the next key thing is doing your research. So you need to know everything about your cash. So it's about gathering the information and getting to know your income and your expenditure and your fixed costs. Now, with your income, when you start plotting it on your spreadsheet, one of the things you'll start to see when you do your research is how your customers pay you. Now, you might find that you've got terms of 10 days, 5 days, payment, immediate payment, 60 days, 30 days, but are they actually sticking to those terms? And if you don't plot these things and measure them or have them in a cash flow, how do you know? You're running blind in that respect. So this sort of information, you start to see what's happening. Same with your expenditure. What are you spending your money on? What fixed costs have you got? Are you completely aware of all those scenarios? So again, gather your information, and before you've got your tool. Next thing is gather your information, get everything around you that you intend to put on that spreadsheet, and don't cheat yourself. Fixed costs, I'm talking about your office costs. Like I know Roland is an absolute bugger and I have to pay him on the 1st of every month. If I don't, he'll kick me out of my office. So there you go, the 1st of the month, I know I'm going to plot my rent in. All right, the next thing you do, once you've got all those costs together and you've got everything around you and you know what you're doing, is plot the information. So Creating the plan. So you've got your fixed costs, you know what your expenditure is, so you know what you're paying your suppliers, you know that you've got to pay Roland his rent, and you've got a good idea of when your customers are going to pay you. So you create your plan. Now, what I suggest you do is you initially start with 3 to 6 months and then extend it out to 12 months as you go. You're probably looking at me at the moment going, she's mental, you know, we're in a pandemic, how on earth can I plot any of this? If you start small, keep it simple on 3 months, you'll soon find you can start pushing it further and further out. That you can go beyond 6 months. You can go, quite often I go up to 12, 24 months because I know what fixed costs I've got, and I'm quick, I tend to get quite hot on these things. When you're creating this, I would say, again, be honest with yourself. Quite often when you start to do a cash flow and you've never done one in your business before, you will have what I describe as an oh shit moment. You will look at it and go, I haven't got enough money for this. I didn't realise I had all these costs. I didn't realise my customers aren't paying me on time. So when I say be brutally honest with yourself, I'm saying capture everything and be honest. If you think that customer is going to pay you late, put it in, because by having that oh shit moment, you will know what you have to do in your business to get things right. It's very, very difficult sometimes, especially in a pandemic, to manage your cash. So this gives you that foresight of being able to manage that situation. So if you get that oh shit moment straight away, you will know what you need to do to put that right within your business. You will know what you need to do to be able to sustain your business, to make sure that you're here next year or next month. And yeah, it's scary. Even I find it scary sometimes. I have clients that I have to give a nudge to, but it gives you that foresight and that clarity within your business to be able to see what's happening, what money you've got coming in. So when I say be brutally honest, don't miss out the £7.99 to Audible, Amazon Audible, because it's a little amount. Those little amounts stack up, and that's the detail within the plan that you need to do. So you've got your tool, do your research, create the plan. So initially I always say start with 3 months and then go 6, 12, 18, 24. At the moment, yes, all right, going 18, 24 is probably a big ask. But if you've got 3 to 6 months, that is how long you're going to be able to sustain your business, and you know that you'll be fine. You won't get those sleepless nights. You'll be able to sleep again knowing that your business is in good hands, that you know what you're doing, you know what money you've got. I say being brutally honest is absolutely the key with all this. Don't kid yourself, and don't do it on the back of a fag packet. So use your tool. And then when you've done all that, review it. I always say review it and live, because actually it gives you that ability to start living again within your business, that you've got, you can see what's happening, you've got the clarity, you've got the cash, hopefully. If you haven't got the cash, you know what you need to do. Obviously in the UK at the moment, we've got bounce back loans happening and C-bills, etc., which are the bigger loans from the banks to get the businesses through this pandemic, this terrible situation. And a lot of businesses haven't realised that in a year's time, they're going to have to start paying those. So this is about reviewing that, having that foresight now to review that and live through this. So, the end result of once you've built your cash flow is about checking that data and living with it and living to that plan. So sustaining that plan, keeping it going. And as I say, breathe. It gives you that ability to breathe in your business. You know where you are, you know what you've got to do. And all the way through, I always say, keep it simple, keep it livable. So, you give yourself that clear view. It's, I think people don't realise how important that cash tracking is. We all focus on the year-end accounts, and Natalie will talk you through this in a minute, that year-end accounts, great, but it's historic information. It's very important information that you need, and you need to know how to read. But this is about managing yourself through day-to-day scenarios, and cash forecasting is one of those. It's one of the 3 key reports that you need within your business. So hopefully that's given you an insight into, how I work within sort of building a cash plan and how you can do it within your business. It's not complicated. It is as simple as cash in, cash out, and knowing your numbers, which is what we're about tonight. So when this is the journey I take my clients on, because I worked with a business about a year ago that was in the situation of not knowing the cash, and they were in a situation where they were in a £30,000 loss within 1 month. So had they not had, if we hadn't done the cash forecasting we did then, they wouldn't have been here today. And I'm quite proud to say that, at Christmas, the business owner of that rang me and said, I've got 100,000 in the bank. Now, she hadn't been in that situation before. So this is the journey that I take my clients on, is that we do this financial review, because I think it is so, so important. And planning through your business, and cash is the one thing I focus on a lot. I do a subscription service for my clients to be able to review their cash flow each month. I do a free cash flow training that I'm running at the moment, and that'll be something I'll be running again in February, because I think it's so important that, especially at the moment, that you do know your numbers and that you know how much cash you've got within your business. So this is just a little bit about the journey I take my clients on as a financial planner. So if you need some help, that's how to contact me. I also am on LinkedIn. I think Roland has dropped the links in for you tonight to, so you can contact me. And hopefully I've kept that simple for you. So that was the intention. And if you've got any questions, then please shout out.
So thank you very much, Sally. Thank you. Yeah, so we're going to do some questions at the end. But yeah, it's very good. I mean, I did your free introduction 5 days to cash flowing a couple of weeks ago. It was really helpful. The free spreadsheet you gave and things like that. So that was really, really helpful. Okay, so we're going to go straight over now to Natalie.
Hello. Right, I just need to try and find a way to share my screen now. I think it's there we go. Okay, so this is me. Okay, so I'm going to give you a little bit about me professionally, a little bit about me personally, and then we're going to crack on to why we're here today, which is understanding the numbers and understanding our financial statements. So this is me. I went straight from school into a job with training, and I completed my ACCA in 2009. I was 22 at the time, one of the youngest in my class, so I took that as an achievement. I worked for many different firms of accountants over my career, and it got to the point at the back end of 2014 where I thought, you know what, I'm going to do this for myself. So I did. I've now got a team of 3 others that work with me, and we're progressing and we're growing really nicely. We're based at the Dragon Coworking in the St George Hotel in Rochester, under Roland, and I do a lot of volunteer and ambassador work for the Medway Food Bank. It is a local charity around here that is very close to my heart, and I will do whatever I can, whenever I can, to help them continue doing the good work that they do. So we all have personal lives. I don't really like to share mine a lot, but this is my family. These are my guys. These are the reason I do what I do. And our most recent addition, Lucas, was only born. He was a pandemic baby, born June 2020. So yeah, only 7 months old at the moment. So the business. So within my business, Accounting Connections, like I say, we're based in Rochester. I've been ACCA qualified since 2009. We've just taken on a new lady, Ellie, who has been AAT qualified since 2018. We've got Victoria, who is studying her AAT at the moment, and then we've got Kim, who helps us all and keeps us all in line, who is our administrative assistant. Our vision at Accounting Connections is that we want to help as many small business owners as possible. These are the kind of people that we want to work with. We want to work with proactive, forward-thinking business owners who are willing to work with us, who are open to taking advice. They're the kind of people that we want to help. So why we're all here today, you want to understand your accounts. You get these accounts, your accountant sends them to you at the end of the year, and they go, "I'll review these and sign them for me if you're happy with them." And you go, "Oh, okay." Look at them and just sign them, because you have no idea what you're looking at. So hopefully I can help you out with that today. So financial statements. Financial statements is one of these techie terms that we use. Essentially, it's a set of accounts. And financial statements are made up of four main pieces. The first one is called a statement of retained earnings, a statement of income and retained earnings. That's the international reporting terminology. In the UK, we've always known it as a profit and loss account. The second part of your financial statements is a statement of financial position. Again, that's the international reporting term. Here in the UK, we've always really known it as a balance sheet. You then have notes to your financial statements that will back up all of the information. Sort of, if you have a figure on your balance sheet, you'll find a breakdown of that in the notes to your accounts. And then the statement of income and retained earnings, your profit and loss, that tends to be a summary. And then later on in the accounts, you'll find the detail behind that. You'll find a breakdown of it. So accounts basis, there are two different bases on which you can prepare a set of accounts. One is called the accruals basis and one is called the cash basis. So if you're preparing accounts on an accruals basis, it means that all of the items, all of your sales, all of your expenses, they're all recorded onto your system at the date of invoice. On your cash basis, all your items, your sales, your expenses are all recorded on the date of receipt or the date of payment. So here in the UK, sole traders can use the cash basis if your turnover is less than £150,000. Limited companies are not permitted to use the cash basis. They have to use accrual basis. So it really does bring into light this whole cash flow issue, because profit and cash are not the same thing. So we're going to focus on the profit and loss account to start with. What your profit and loss account shows is purely income and expenses within a business. Okay, so income in this respect is going to be sales, government grants, bank interest. Expenses are going to be items that you spend out on your business, such as materials, tools, telephone, office rent, things like that. And then whatever's left is your profit, and that will be subject to tax. Timing. So your profit and loss account will show the business performance over a period of time. It's usually a year. It can be different, especially if you're in your first period of trading, or if you're going through a change of accounting period. But generally, what's shown on your profit and loss account is the values for a period of time. And like I mentioned earlier, profit is not the same as bank balance. And I say that because sometimes I will present a set of accounts to a client and they will say, "Oh, great, I made 20 grand's worth of profit this year." Well, there's not 20 grand in my bank though. Why don't I have 20 grand in my bank? If I've made 20,000 pounds worth of profit, there should be 20,000 pounds in my bank account. Not quite, because there are certain items that go into and out of your bank account that are what we call balance sheet affecting items. They don't hit your profit and loss account. Things like if you're repaying debt, if the company took out a loan and you're repaying that loan, then that is not an expense to the business, that is repayment of a loan. So it hits your balance sheet and not your profit and loss account. Similarly, if you as the business owner take some money out to pay yourself, so there will be a proportion of that that does hit the profit and loss as a salary, but it may very well be that you're repaying your own director's loan, in which case it's not a profit and loss affecting item. So profit and bank balance are not the same thing. So this is a standard profit and loss account as it would be set out in your financial statements. So I'm just going to run through in different sections, telling you exactly what every single figure on this sheet means. We're going to start off with this top section: turnover, cost of sales and gross profit. Turnover is the amount of sales your business has invoiced in a period of time. You remember what I said earlier about the accruals basis? So you may have your period end may be 31st of March. You may have raised a sales invoice for, say, £10,000 on the 31st of March, but you don't physically get that money in until mid-April, but it is classed as a sale on the day that you raise that sales invoice. Okay, so it is not the amount of money you physically had into the bank account, it is the amount you have invoiced in that period. Cost of sales, similarly, on the flip side, this is the amount of cost that your business has been invoiced for in a period. It's not the amount of money that you've paid out. If you've received a bill on the 31st of March and don't pay it till mid-April, it is still a cost to your business on the 31st of March. Specifically, cost of sales are, this is costs that are directly attributable to your sales income. So if you are, for example, buying desks, you're buying in desks, you're refurbing those desks and you're selling them on. The amount of desks you buy depends on how many you sell. So it's always a cost that is directly linked to your sales. If you have more sales, you will need to buy more desks. It will go up exponentially as a result of the sales that you're making. So it's a linked cost. Gross profit. So the amount of profit your business has made from its main trading activity is the gross profit. Lots of people like to calculate their gross profit margin, and that's a simple enough calculation to do. You simply take your gross profit, divide it by your turnover. In the example that I've given, that this business has made 40% gross profit margin in this period of time. Okay, so we move on to the next part of the profit and loss account. Okay, administrative expenses. These are the day-to-day running costs of your business. They're not related to how many sales you make. They are going to be fixed. It doesn't matter if you've made £100,000 worth of sales or £100 worth of sales. You will always have to pay these costs. Things like rent, salaries, computer costs, travel costs, stationery. You know, these are the general costs of running your business. And again, when they are invoiced. Other operating income, this is the kind of income that's generated within your business that is not from your main trading activity. So things like government grants, which is going to be more prevalent this year as we prepare accounts for the year just gone. And certain banks do cashback incentives and things like that. That's where that kind of money would go. Sale of fixed assets, this one's quite self-explanatory. If you sell an asset of your business and you make a bit of money on it, this is where it goes in your profit and loss account, which takes you then down to your operating profit or loss. And this is the profit or loss that is made on all business operations before you take into account your financial costs. So what are the financial costs? Let's take a look at that now. So financial income, it's all to do with the income that is made on business money. So if you earn interest by having your money in a bank or a building society, then that is where that is financial income. Similarly, if you say pay your tax early to HMRC, they will in fact accrue interest, and you will earn interest by having paid them early. Not that lots of people like to take that option, of course. Financial costs, on the flip side, this is the cost charged on your business money, which is interest paid or due on late payment or on money being held in the bank account. So banks or HMRC. Standard bank charges, though, they're included within your admin costs because it's just a cost of operating your bank account. It's not directly related to how much money you hold within the account. That is why there is that distinctive difference between bank fees and bank interest. So two different places that they appear in your profit and loss account. And then that takes you down to your profit or loss before tax. So that is, like I say, self-explanatory. It is the profit or loss your business has made before tax is charged. So now it's time to charge tax, the bit that none of us like. So tax discharge at the appropriate rate. Currently in the UK for limited companies, the rate is 19%. and then that will take us down to our profit after tax. Lots of people also refer to this figure as your net profit. So if somebody ever says, oh, what's your net profit? You'll know that they mean this figure. It's the one after all tax has been accounted for and everything has been taken into account. Now down to the bottom section. Okay, so in every tax year, you're going to have made profits. You may very well have made profits, and you will take some of those profits out as dividends. What you don't take out is carried forward to the following year, and you can then take it out at a later date whenever it's the most tax efficient for you to do so. So in this example, you can see that we've got £5,000 worth of earnings that we made in previous years that we haven't yet distributed to the shareholders. So that is why that is there. We then take out the dividends for the year. This is the amount of dividends that's declared to all of your shareholders as a whole. In the UK, there's the tax rates there. So for the first £2,000 of dividends are tax-free. In the basic rate band, they're charged at 7.5%. And in the higher rate, they are charged at 32.5%, which will then leave us with our retained earnings to carry forward. What I just said earlier, we make money in the business, we pay tax on it, we draw out what we want to draw out, and then we leave the rest of it to carry forward to take out in a future period. Sorry. Right, so now let's move on to our balance sheet. Balance sheets, whereas your profit and loss account was income and expenses, your balance sheet is assets and liabilities. This is your statement of financial position. What is the financial position of your business? So your assets are things that the business owns, money that's held in the business, and that's money that's owed to the business. Liabilities on the flip side is money that is owed from the business to other people. So whereas a profit and loss account shows you the financials over a period of time, a balance sheet will show you the financial position of a business at a specific point in time. So if you are, for example, preparing a set of accounts for a financial year to 31st of March 2020, then your profit and loss will show you your income and expenses for that whole year up to the 31st of March. Your balance sheet will show you what your financial position is on the 31st of March. So this is what a typical balance sheet looks like. And you will notice that these two figures are exactly the same. That is by design. They should be the same. If they're not the same, your accountant hasn't done their job properly. That is how your balance sheet balances, okay? Net assets should always agree to shareholders' funds. Again, like the profit and loss account, I'm going to work down each line of this so that you know exactly what should be shown and where. But one of the very vital and first instant checks you can make to see if your set of accounts is right is look at the balance sheet. Are those two figures the same? If they're not, something has gone wrong. So let's start with fixed assets. So fixed assets are large items that you purchase for long-term use in the business to help generate income. You know, machinery, motor vehicles, large tools, computer equipment, office furniture, all of those main items that you need to run your business and generate some income. We've then got your current assets. Current assets is cash and other assets that are expected to be converted into cash within a year. So if you've got some stock in your stock room, like say back to the example where I said, you're buying and selling, doing up and then selling on desks. How many desks do you have sitting in your stock room? You do expect to probably sell those within the year. That's a current asset. Cash held in your bank accounts, trade debtors, so any money that your customers owe to you, any money that you may very well need to defer to a following period, essentially any money that's due to your business for whatever reason. That is what a current asset is. Next item we've got is current liabilities. So this is all the money that you're due to pay out to other people within a year. So your trade creditors, which is your suppliers, you may have a short-term loan. Your director's loan account also gets shown here under the basis that it is repayable as and when you would like to repay it, as and when the money and the funds are there to do it. Accrued expenses is also another one that goes here. So if you get invoiced in arrears for something, then you want to bring the cost in early when you're doing a set of accounts, and so the other side of it goes to current liabilities. Then we move down to net current assets, and this line on your balance sheet is a calculated amount. It is literally the difference between your current assets and your current liabilities. So that's a nice easy one. It's just a calculated amount. Similarly, this next line is a calculated amount. It then takes the total fixed assets away from your net current assets and tells you what you're left with. And then we move on to long-term liabilities. So whereas current liabilities are those costs that are due to be paid within a year, long-term liabilities are those that are going to be paid over more than 1 year. Typically, you would see things like loans or hire purchase agreements in here. If you've bought a vehicle for your business or bought an item of machinery on finance, you tend to have that over, say, 3 or 4 years. So the proportion of that is due after more than 1 year is that sits in long-term liabilities. That takes you down then to your net assets. That is a calculated amount, which is your total assets, less your current liabilities, less your long-term liabilities. So then moving on to the next line, the next section of your balance sheet, your shareholders' funds. So this is your share capital. So if we've got husband and wife business, Mr. and Mrs. Smith, they own 50 ordinary shares of £1 each in their business. The total value of their share capital is £100. So that's what goes there. And then this item here, your profit and loss reserve. If you remember from the very last thing I spoke about on profit and loss accounts, it is that figure at the bottom. It is that retained earnings carry forward figure. Obviously, these two examples are very different, but that would be the figure that ends up in your balance sheet. So just as a conclusion and to wrap it all up, what I need you to remember is that your profit and when you're looking at these figures, your profit and loss account is purely business income and expenses. It is not money into or money out of the bank account. And your balance sheet is all about assets and liabilities. What does the business own and what does the business owe? And that is pretty much the key to understanding your financial statements. My name's Natalie Pieri, my company's Accounting Connections, and that is how you can get in touch with me. Back to you, Roland.
Excellent. Thank you very much. Thanks for that, Natalie. Screen share stopped. Right. Can you cancel your screen share there, Natalie? Is that...
Oh, okay. Oh, I don't actually know how to do that. Oh, here we go.
Are you there?
No.
Excellent. I'm still getting used to this Zoom thing, aren't we? So thank you very much. Thank you very much, Sally, and thank you very much, Natalie. So I'm going to throw it open. Has anybody got any questions they'd like to ask Sally or Natalie?
I would. Hi.
Hi, Karen.
Hello. Thanks for that. It was really good. So I'm a Xero user, or my accountant is. Bless her. I don't really understand it. So would you suggest having a cash flow forecast alongside that, or is Xero where I should hold everything, like my income and outcome, so I can track the budget?
Right, I personally have Xero as well, but I run my cash flow on Excel alongside Xero. Xero holds all the information, but I would suggest, I do a download every week of what has gone through my bank, and I basically plot that within my cash flow. Xero does do cash forecasting, but as I say, it will only extend on the information you put in it. So if you pay your supplier late, it won't plot that for you. You know, it'll say to you, right, this is when you're due to pay that supplier based on those terms within Xero. Again, if you've got your customers based on 30 days, it'll plot it and say, right, in 30 days that invoice is due, it's now overdue. When the difference of putting it on Excel is that you can push it out and say, actually, they're only going to pay me here. So, you know, I've got the information out of Xero, I've put it on here. But you just keep it simple as well. And you know, when I said earlier about income and expenditure, I literally have I've got a really simple spreadsheet that Roland mentioned earlier, that I only have a few headings on it that like group my suppliers together. So I don't overcomplicate. So you're not effectively duplicating the information. Yeah. You know, you're using the information out of Xero and plotting it that way. And you know, if you're not understanding Xero, but you understand spreadsheets or a simple spreadsheet, then yes, you know, do it that way.
Perfect. Thank you.
Thanks, Karen. Yeah, it's well, I use Xero as well, Karen, which is great. But I still have a separate spreadsheet completely for cash forecasting, and I think it's really, really useful because Sally and I've talked about it before. About you can actually get your hands on those figures. And you've actually, when you're actually putting those figures actually into a spreadsheet, you can actually understand where everything is. And they're the actual figures as well, because like Sally was saying, you only get information out of Xero, what you put into it, and it's not always. You can manipulate the figures within your spreadsheets. So it just makes.
Like you, like Nexodus, that runs the co-work space, does my invoicing, so Xero doesn't even do that aspect. I have to manually transfer it all. So again, that's another slight. Yeah. Okay. Thank you.
Okay. No worries. Amy was asking about examples of spreadsheets, Sally. I think you do that on you've got you on your 5-day course thing, haven't you? But you do.
Yeah, I do. You know, and if anybody wants the spreadsheet, or even, you know, to access the courses, I mean, I don't do any funky Facebook groups or anything like that. It's literally videos that drop in every day that talk you through the process that we've just gone through. And on that, I provide the spreadsheet. So if anybody's interested in that, you know, give me a shout, drop me a message, and I'll send you the links so that you can watch the training and, you know, have access to the spreadsheets too.
Okay, brilliant. Thanks, Sally. I'll put the links in there. I'll send out an email to everybody in the morning, and if you send me those links, I should get those in there for you, Sally. Yeah. Okay. Is there anybody else with any questions? Silence there.
They've been bombarded with too much information.
They have, Natalie. You did a good job there.
Hi, my name's Nicola. I've got a question, if I can, probably a very different one to everybody else's experiences. I started an Etsy business last summer, and obviously having to do my accounts for it for the very first time. To be fair, with the help of an accountant, so that's good. But just so that I have a better understanding of something, I get the whole expenditure and fixed costs. So with Etsy, obviously I get paid as soon as somebody purchases something, so it's immediate. Etsy actually take a percentage, which I'm still wrapping my head around what that actually means. But sorry, my daughter's interrupting me. Just be quiet, darling. I'm just trying to finish this question. But with the whole tracking what things cost, as in material cost for me to make something, and there's obviously a cost of me selling the product, how do I factor in my time? Because if I'm being taxed on purely what my material cost is, and again versus what I sell it for, that doesn't necessarily reflect my time. So potentially a product may take me 6 or 8 hours to make, but by the time I've made it and discount the cost of materials, I'm probably charging myself at £3 an hour or £4 an hour, which is horrible to think that from what I've come from in the past. But I guess this is a learning thing in itself. So yeah, I just don't know how one tracks time, or does one simply not track time?
Well, I mean, from a tax point of view, I can give you an answer there. It does entirely depend on what your setup is for tax purposes, whether you're a sole trader or
Sole trader
company. So, I mean, as a limited company, you could put yourself on the payroll and, you know, generate a salary for yourself. As a sole trader, it's not so easy, because as a sole trader, you don't have that separate legal and financial identity from your business.
Sure.
So everything your business earns is classified as your income. So
Right.
And labour is not, like your personal labour is not an expense to your sole tradership.
Sure. Okay. That's kind of how I understood it. And I know there's ways of raising costs of product to try and wrap some of that in, but then it's finding the balance of what people are prepared to pay for things. So, but thank you for that, Natalie.
Sally, would you like to add anything to that?
No, I'm just thinking the same as Natalie there. Actually, you know, it would be a case of you would need to build in the fact that you know, as being an employer, an employee, because obviously that is the only way you could charge your time.
Yeah, okay. I mean, from a business point of view, I'd say it's really important to make sure you actually value your time and you're actually getting paid correctly for what you're doing. Otherwise, it gets a bit demoralising if at the end of the week if you're paying you're only earning £3 an hour.
I know it's not great, is it? But I think the problem is there's certain products where I have higher profit margins, and with the hope that it balances it out. But I think that's part of what I'm going to learn through doing my spreadsheet for this year, is what's working and what isn't from a time to profit ratio. Yeah, absolutely. And tracking those numbers again, as Sally was saying, tracking those numbers. Once you track those numbers and you're tracking everything you're doing, you know what actually makes you money. They're the products you need to be selling the most of. And, yeah, exactly.
Again, you'll learn these things over time. It is. I mean, business is hard. It is a learning thing, but there are people out there that have done it all before. So it's great that you want to come along to these sort of events to actually learn things. And yeah, again, if you need any help, please just reach out. We know lots of business between us, Sally and Natalie and I know lots of business coaches and people that will be able to help you out as well.
Thank you very much.
Right.
If you're just getting through things now, if you haven't got a business plan in place, one of the things, you know, when planning from this scenario is build in what you actually want to earn. Think about what is it that you want to earn based, you know, from your business, and that will give you the figure for, you know, what to add to your products in respect of what your time is worth. Because say you want to earn 100,000 in a year, then you've got to split that over the amount of products you're actually creating and selling, and that'll give you the margin in respect of, you know, what your time is worth to you and what you think your time is worth.
Yeah, good point. I wish I was talking about those kind of numbers, but a girl can dream.
Exactly, aim high.
Yeah. Any other questions out there? No, all quiet. Okay. So just to finish off then, I mean, so Sally, tonight, people, you know, if they want to get started, they should get out there, get that spreadsheet started, just get the bank statements out and actually work through everything they need to do then.
Spreadsheets will save the world.
That's it, true accountant, spreadsheets will save the world. Okay, so I'll be sending out an email tomorrow, guys, so I'll put the links in there of all our speakers. So it'd be great if you could link up with those guys. So if you need any help, anybody, please feel free to reach out to us. If you've got any other questions you didn't want to ask in the group, I'm sure our speakers and myself would be very happy to answer absolutely anything at all. So thank you very much. Like I said, this will be on our YouTube channel as well. So thanks so much, guys. And thanks for coming along to our first sort of Dragon digital event of 2021. We will be doing some more, so please keep an eye on our Facebook group. And thank you to all those that have joined us from other co-working spaces and other co-working space owners. Really appreciate you coming along and sharing our event with us. So thanks very much, guys.
Thank you.
Thank you.
Thanks very much. Bye.